Welcome in to Make Your Money Matter. I'm your host, Barrett. Today we're going to talk about why there's always a reason to sell investments or sell stocks. But before we get started, make sure to smash the subscribe button and hit the notification bell so you don't miss a single episode. All right, let's get into it. Now, in starting this and thinking about today's show, years ago I was exposed to a conversation in an economics class I was taking during my undergrad, and it was the topic around behavioral financial traits and how we look at risk. And the question was posed to this honor study I was in around the concept of the mind, the human mind, and how we conceptualize our risks and our losses versus, let's say, our gains. And what was said, and I always remember this, and it stuck with me, that our human brain, the way it's wired, will always remember the $1 loss more than the $10 gain. Said differently, just think about life in general. We tend to get really myopic and granular on the things that happen to us that aren't so good. It's interesting, right? And I'm not saying that's bad or good. I'm just saying, think about it. Think about your life and what you've gone through, good and bad. And sometimes we tend to, focus on the negatives when we overlook the positives. And we do this all the time in our life, especially in our investment life, particularly with investments, because money has a grip on us that we sometimes don't know or don't give it much credit. And that's why I speak so heavily on our show around this topic. And I think watching, stock investments drop, say by 10 or 5 or 10% or whatever in a single day, for example, can obviously be anxiety inducing. I'm not immune to this either by any means. And I've been doing this for nearly 2 decades now. And I want to share this message here because, and to be fair, it doesn't happen more often than I think most of us would like it to happen, right? And I always share this. It's kind of a dumb statement, but if the stock market or your investments always went up, you wouldn't need, nor would you ever worry about investing in general, because we all know that investing has risks, right? We know that. But if it just went all the way up, you wouldn't need any, kind of risks or anxiety. So investing in stocks or the stock market, for example, has risks. We know this. And many investors, and maybe I'm speaking to somebody today, but many investors feel like they have to sell something in order to mitigate their losses. You ever thought that before? Or just think about this. Imagine if you're an investor right now, you've been doing it for a little while and you've seen this, before where it moves up, maybe this, or, moves down 5 or 10%. You think, oh, okay, maybe I'll just, cut my losses now. And don't get me wrong. We've all had this thought process. At least I know I have. However, doing so may cause us to miss out on maybe a rebound that is right around the corner. Now, again, I know in saying this that it largely sounds to, to many of us, we're typical investment managers, like, just stay the course, right? Don't worry about it. It's always going to go up over time, they'll say, and so on and so forth. I'm not naive to this, but because I think it's important to realize that I understand very clearly, if you just look at history, right? Because obviously historical performances or past performance, as we say and we know, does not always reflect future gains, but we can glean a lot from different time periods. And what I think is happening today, what we think in our mind is happening today, we're like, oh, it's so unique. We've never seen this before, but it's actually happened before. And that rebound, by the way, might just be around the corner. Now, I don't know what tomorrow holds. No one does. And as I say often, if someone out there you're listening to or watching says they do, run, because it's probably too good to be true. I digress. But you have to look at this in context. And obviously, while short-term losses can be hard to handle emotionally in particular, right? It's important to remember that, the stock market has generally increased over the long term. And I want to share something with you. I saw this graph and this research done by BlackRock that I thought was actually really impressive. And what I'm going to show you here on the screen is the growth. I'm going to show you the growth here of about $1,000 if you invest in the S&P, since 1926. They went all the way back to 1926. Now, obviously, clearly, when you're looking at these kind of graphs, and many of you have seen these kind of graphs before, I'm not so focused here on, obviously, if you invested in 1926, what a dollar would be worth today. As you can see here in the graph, from January 1st, 1926, it'd be worth, a little over $11.5 million. But what I want to focus on, and what I really liked about this graph in particular for today's show, is all the time periods that you see there that were very dramatic, and traumatic. And many of us watching might have lived through a lot of these. I mean, obviously starting in 1929, 3 years after this research was done, you have what? The Great Depression. 10 years later, you have the start of World War II. 11 years after that, after a world war, you have a Korean War. You fast forward, you have the Cuban Missile Crisis, and you can see as you go up there, you have the Vietnam War starting in the mid-60s there. You have the oil crisis and the oil embargoes. You can see now there in the 70s, the energy crisis in 79, Black Monday, that one day, speaking of short-term losses, right? The Black Monday in 1987. Then you have the Gulf War, you have the tech bubble burst 01. I mean, that can go on and on. Global financial crisis in 08, Many of us have lived through that, whether you were a child living through it or as an investor, maybe an early investor. And obviously, a couple of years ago, you have the pandemic. Now, what I want to focus on here, what I think is really important is all those time periods would have been in your mind telling you what? Again, it would have been like there's always a reason to sell stocks. Now, as you can see, going from each of these time periods, you can see what the market has done. Now, again, by no means am I saying that we're going to have a disruption this year, or maybe we had in 2022 a little over a year ago, and then everything's just going to go up from here. I'm not saying that, but I am saying that depending on where you are in your life cycle, the season or the age and stage that you're in, right? Wherever you are, make sure you focus on the future and make sure you're sitting with counsel and advisor to figure out what your time horizon is relative to your risk. Look, do I know if the market's going to rebound tomorrow? Nope, have no idea. No one does, okay? And I know that those things you trade off, of those things, you can manage your accounts based on tactical or, market trends. And look, here's the thing. Fundamentally, how we here at One Capital Management, I can only speak about us as a firm, right? How we manage assets is for the long haul. It's looking under the hood, if you will, and seeing if the engine is good and realizing that, yeah, the paint needs a retune or the windshield needs to be fixed. But those aren't going to, not make the car go, in my really lame car analogy here today. But long term, we can see what will likely happen. Companies are going to grow. They're going to continue to sell and grow and profit. And those growth and profits will likely be funneled back to you as owners or investors, as stockholders, who stay the course. And that owner should be you. That's what I'm trying to share today. And that's why I'm sharing, that there will always be a reason to sell stocks. So as we're coming into an election year, as I've talked about recently on our show, and just thinking about the context with this graph, which I really loved and I wanted to share, today, is just around and understanding that, right? Make sure you have someone to speak, this with and walk through your anxiety and your fears. And make sure it's contextual, right? Make sure it's contextualized to your numbers, your investments. Make sure it works for whatever you're going to do. React or not react to selling or staying the course, but make sure it works for you and is driven, not driven by your emotions. Hey, I hope you enjoyed that today. If you did, make sure to subscribe to our show so you don't miss a single episode. And always remember to make your money matter.